Hello, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan. Thank you for joining us in the live stream. This is my first attempt at doing a live stream of our weekly trading game plan. So please let me know in the chat if the volume's okay, if the picture's okay, please let me know. So let's get started. The title of this week's weekly game plan part one is Sell the Rips in Bear Markets. I know this week has been volatile, a very bucking market. So we'll help you navigate, we'll help you buck the bear, and we'll talk about how to sell the rips in bear markets. So let's get started. So as before, as was recommended by Douglas PC, we're going to have our weekly trading game plan notes in a Google Doc that we can share with you. I'll probably put that in the comments of the video after the fact. Probably break up the notes for part one and part two to make that a little bit easier. And hopefully that will help. So please let me know if that works for you. So again, let's start our part one of our weekly trading game plan for the week of May 23rd through May 27th. And as usual, let's start in the homepage of FinViz. You can see our affiliate link for FinViz in the description box below. We can see on Friday the market was quite volatile. Started positive and then turned negative around noon, and then swung back up to break almost even at the end of the day. But we can still see under the covers there's a lot of weakness. So most stocks are still below their 200-day moving average, under their 50-day moving average, etc. So if we briefly look at the news, we can see there's issues with crypto. A lot of talk about crypto being headed for a crypto winter. You can see, a lot of the concerns about inflation. There's a lot of attributing this bear market to inflation. And you've heard the talking heads now on TV have confirmed. They're admitting, yes, we're in a bear market. We've been saying this pretty much, that we're in a bearish market pretty much all year. And we've been planning accordingly and hopefully helping you plan accordingly. So then we can see crude oil is bumping up a little over 110. Natural gas was headed up, looked like it was going to hit 9 and then kind of backed off a little bit. We see gold finally recovered and it's bouncing. And then we can see the futures on the indexes are right now, they're pointing a little positive for the Dow and S&P, still negative for the NASDAQ. And we can see the treasuries backed off a little bit from 3%. Again, I think a lot of that, the bump in the price was a risk-off move where they're, sell stocks, buy bonds move again. So as we had pretty much a risk-off. So I hope you'll bear with me. It is my first attempt at a live stream for our game plan. So I'm trying to navigate StreamYard on another machine and keep up with the chat as well. So thank you for being patient and bearing with me. So, okay, if we look at the indices real quickly. Let's look at the SPY, FinViz. So we can see that decline, that a lot of volatility near the bottom. You see it finally breached that previous low point. We see a lot of capitulation on Friday, that long tail. It's generally a sign of capitulation. So we saw a couple of long tails of capitulation, although we're still showing in a downtrend. So yeah, we're definitely in a bear market, declining bear market. So if we look at the Qs, probably going to look very similar. So So again, we see something very similar, a couple long, very long tail, and then a decline further from there. So we're definitely showing a declining bear market. DIA, the Dow. Not quite as steep, but the Dow has declined further from its average and further from that previous low. So look at the Russell, IWM real quick. And good morning, Tanvir. Thank you for joining us. So again, I'll try to keep an eye on the chat and navigate that as best I'm able, but please let me know if you'd like me to cover something specifically. We can do that since we're live here. So we see the IWM again decline majorly. Looks like it may have found a little bit of support right there at the end. So we'll see how that goes. And then the VIX, as we'll talk about the futures, and in part two, we had a lot of fun with the VIX this week. It was bouncing up and down. Yeah, you can see that choppy action in the VIX. We made some nice money shorting the VIX with SPXY this week. So we'll talk about that more in part two. I think trading volatility. There's a lot of opportunity in trading volatility right now. So then if we look at the groups tab, look at the sectors. So we can see on Friday, we had some green. So healthcare, energy, real estate. So we had some green. The worst performings were communication services, consumer cyclical, and industrial. If we look at the week, we see this recurring theme of basic materials, healthcare, utilities being positive, and technology, communication, and consumer cyclical. Kind of a shocker a little bit was consumer defensives going negative. So, and then for the month, really energy has been the only outperforming sector for the whole month. So, and I'm sorry, Tangier, I've seen mention of SIG. I don't know anything about it. So I know about the monkeypox thing, and I guess there was another stock, AEMD, that was running a little bit. They had some treatment for monkeypox too. So maybe in part two, maybe if you bring that one up again, we can look at a chart specifically for that one. So, okay, so there's our group. So let's look at our industries real quick. So we can see REITs did really well on Friday. They kind of had been pushed down a little bit. We've traded. We still own a couple REITs, and we swung O, which is Realty Income. That's one we like. We were waiting for it to come back down, and we made a nice profit on that swing again. Again, we'll talk about that part two. Probably see a lot of energy. Worst performing retail. Yeah, you heard retail. A lot of the retailers. Walmart had bad earnings. Ross, Target, they all disappointed. They're having supply chain issues. Somebody said a while ago that this was going to happen, where they're going to be undersupplied, over-ordered, and then have a glut. Somebody said that a while back. So then we can see for the week, solar was good, and then materials, uranium ran up, and energy, silver bounced. We see gold's kind of turning around a bit. So it's kind of a recurring theme, and also we've talked about recession proofing and inflation proofing your portfolio in some of the areas that we've suggested. Consumer defensive. We mentioned aerospace and defense last week. Anything where they can raise the prices as inflation goes up is going to be a inflation proofing theme. So okay, so we've looked at the groups and sectors, etc. If we review the economic data from last week, and again, I try to post these results as they occur in the Surf the Markets channel in our Discord, so keep an eye on that. We see Monday, we got this manufacturing number, which was negative, not good. Most of the news is generally, wasn't very good, and therefore the negative sentiment in general. Retail sales, it didn't miss, but it wasn't any better than expected. Then we have production, manufacturing. Inventories were bad, and this is part of where the supply chain stuff is starting to show up. Um, is their inventories are off, right? They had supply chain issues, and now they've got the wrong inventory, and therefore they're going to have to discount the wrong inventory and get the right inventory to fix their sales problems. Wednesday, we saw mortgages are running, up, and therefore mortgage applications are dropping off. Um, Purchase prices of homes haven't dropped off yet, and you can see building permits hasn't dropped off too much yet. Housing starts, so is starting to decline. So, as we talked about several weeks ago, the housing market is kind of rolling over. We were watching that DRE REIT, kind of missed it; it ran away. Um, but yeah, the housing market's definitely rolling over. Mortgage rates are going up. Therefore, people that have to take a mortgage are going to be, bailing out of the market. So then Thursday we got jobless claims, and continuing was a little bit better than expected, but initial was worse. So that says, okay, there are people getting laid off. We've heard in the tech sector in particular, they're closing job openings. In fact, Twitter with the bit with Elon Musk, etc., they're actually rescinding offers. So initial job. This is a sign that we're headed for a recession. Is they close open positions, and then they put a freeze. First, they put a freeze on hiring, then they close open positions, and then they start talking about layoffs. So we also saw existing home sales was worse than expected. So again, rollover in the housing market. And then on Friday was OPEX. I put a reminder in our Discord that it was OPEX, and that may have also attributed to some of the volatility. So if we look at the calendar for next week, this is investing.com. Again, you'll find this link in that Surf the Markets when I post the results. It also has the link to this calendar. So you can look at this week's results or next week. So if we bump up to next week, we can see, okay, Monday, not a whole lot. We've got some still FOMC people talking, and that can cause some volatility if they say something unexpected. Again, a lot of people are pushing for higher than 0.5 rate hikes, but so far Powell has stuck to his guns that he's going to do 0.5 in both June and July. So now we've got some manufacturing, home sales again, mortgages on Wednesday, durable goods. So again, more economic data. So again, if these continue to miss, this may start to show that GDP is declining, recession, or headed for a recession, and the market, the market's not going to like that. Again, it's going to fuel this bearish trend. And okay, on Thursday we get some core PCE, which again is inflation data, and then we get GDP data. So, and we have jobless claim data on Thursday. So watch out on Thursday for some volatility if some of this data comes out bad. Again, I'll try to post this in the Surf the Markets reports channel on our Discord as it comes out, as I'm able. And then Friday, we get some Michigan sentiment data. So again, last time it was kind of poor, so it said the consumer wasn't terribly happy, which is not surprising with the high inflation, etc. Starting to, gas prices are really starting to hit their pocketbook, etc. So I would expect more volatility, more negativity. Again, as the title of our today states, sell the rips, because so far in the market, every time that it's tried to rip back up, those rips have been sold. So if you get something that's profitable, definitely protect your profits and sell the rips. Take your profits. Don't get caught, back on the downslide. It's our recommendation. Financial advice. We're not financial advisors, etc. But these are our opinions. This is how we are approaching the markets as bear market. So, and please let us know what you think of all this. So, okay, now let's jump over to Webull. Look at the Webull market screen. And right now, for Webull's 4th birthday, they're offering 6 free stocks. If you're not already using Webull, it is our favorite platform to use for trading. We really like it, particularly the extended hours from 4 a.m. to 8 p.m. And you can see right if you open an account, you get 2 free stocks worth up to $300. And then when you fund the account with any amount, so 1 cent or $1, whatever, you get 4 free stocks, each valued up to $3,000. So again, if you're not already using Webull, now might be the time. So let's look at the market screen. Again, we can see on Friday the advancers and decliners was pretty balanced because we had this run up and then run down. So we saw a split distribution. Sorry, I'm reading the comments a second. So yeah, well, Tanvir says he got a mortgage. Well, that mortgage rate at least is less than what it's going to be, right? It's those interest rates are going to keep going up steadily. So we did a video on our other virtual consulting channel called Get Your Cash Now, where we recommended as soon as possible get the value out of your mortgage, etc. So, and then we saw, okay, major outflow out of NASDAQ, some outflow out of this New York Stock Exchange, but major flow out of the NASDAQ. So again, another place you can see earnings. You can see the earnings calendar. We posted the Benzinga graphic for the earnings, again, in the Surf the Markets channel in our Discord, so that graphic's already there. You can also see the earnings calendar in investing.com for the whole week, and then a near-term earnings calendar in the markets tab in Webull. So what's coming up right away is helpful, and it says before market, after market, etc. So earnings still matter, as you hear. When Walmart and Target missed, they got hammered, and it brought all the other retailers down. Even Big Lots, the discount retailers we were watching also got hit because they were in retail. Now that doesn't necessarily make sense because, again, if they're oversupplied, they're going to have to discount. They're probably going to offload to some of those discount retailers. Like that's Big Lots business, is buy Big Lots from upper end of the supply chain, and then discount and sell it through their stores. So if we look at the week, since Friday's probably not too interesting, if we broaden our perspective a little bit and look at the week, you see renewable energy was positive, uranium positive, transports had some bumps, but it's still positive. Telecommunications did okay, nat gas, oil and gas, energy, obviously, education did okay. Look at the ETFs, we can see the directions. So at the end of Friday, we're seeing up, down, short on S&P mid cap. That's kind of interesting. VIX, again, we're not seeing UVXY or SPXY, so it's not a real strong direction on the VIX. There's an inverse alternative. So one is betting short on the Russell. So down on the Russell. So industrials, building materials, tech, healthcare, energy again, basic materials, Natural gas, okay, so energy. Yeah, basic materials. Consumer defensive is showing positive here. So that short blip, again, that's going to be your inflation-proof, recession-proof areas because these are the things that people have to buy, right? Food, uh, transportation related, etc. Real estate's positive too. So commodities, energy, cotton. So commodities in general, cotton, broad, cotton, inflation, an inflation, all weather inflation hedge. Okay, that makes sense too. So, okay, let's talk about let's take a look at the futures and then we'll talk further about strategies, future themes, etc. Just a reminder in the description box, well, I'll come back to that. In the description box, there are a number of videos we put out already that have to do with these strategies. And I'll talk about that further in a minute. And in terms of trade setups, Tanvir, in terms of specific stocks, we'll look at the futures right now. So we'll look at categories, but in part two tomorrow, we're going to take all this data and we're going to then apply the data that we're seeing today in part one, and we're going to then go look at our watch list that we have and call our current watch list, and then we're going to run queries to look for other stocks that meet these themes and strategies, and then put those stocks in our various watch lists, and that's what we'll cover tomorrow at 9 a.m. And I'm planning, if this works out, if everybody's happy with this live stream version, I'll do part two as a live stream tomorrow at 9. So, and I'll work on that right after I finish here, start putting together our watch list, and then publish that live stream as soon as I'm able. Does that make sense? So again, in the futures, we can see, major decline on the Dow, S&P, NASDAQ. Again, they're all showing a decline. So again, the strategy here right now, unless something changes, is we're in a bear market, sell the rips, right? So when you saw this bump up, you see it pretty much when it peaked up and tweezered there. It did it on all the markets. That was your opportunity to get out, right? When you see something like that, and it's done it each time since it rolled over. Each time we tweezered at the top and it rolled over, it sold. So that was your sell point to maximize your profits. If you just held on thinking, oh, we're in a uptrend again, then you lost, right? And Tanbeard, it'll be 9 a.m. Tomorrow. We always pretty much have done our weekly trading game plans at 9 a.m. Eastern time. Part one on Saturday, part two on Sunday. So that's pretty much my plan going forward. Again, if that time works for everybody. If not, I'd love to hear your feedback in the Discord and the comments. If there's a better time for y'all, I try to keep them mornings because I like to go to the beach in the afternoon. So if the weather's nice, usually by early afternoon, I'm on the beach. So but again, let me know if there's a better time for everybody. So again, the Russell, it seems more stable hanging out in the middle there, but it's risky, right? Because it's got a ways to drop, and it could drop farther. Like they've all broken their lows. S&P's holding that low there, so we'll see if it. They say bottoming is a process, so that may be the bottom, but we'll see. And just FYI, we'll cover tomorrow in part two. We'll talk about that we went long VTI, which is a total market index, at that bottom there. So. That's a long-term investment. It might go lower. That's okay. Eventually, it'll go higher. So that's why we took it there. We see the volatility in the VIX. Again, I think this is the best play right now. We're making good money shorting the VIX on these spikes. We hit a couple of them last week. Like we hit that one there, and we hit that one there with SPXY, and we're making really good money. So we'll probably play it again, probably Monday. Mondays tend to be volatile. So if the VIX pops up again on Monday, we will short it again at the peak with SPXY, write it down until it reverses again. So we see oil is around 110. It's just kind of hovering right now. It hasn't picked a strong direction. Natural gas looks like it may be rolling over finally. It's still a little indecisive if we get some events. I know Russia cut off Finland's natural gas, and that might cause a further upswing. But for right now, um, it does look like it's rolling over. As you know, we have a long-term cold, a short position on natural gas using cold KOLD. It's at a higher price, and we were looking for, if it were to peak back up around 9, we would take another position in cold KOLD to short nat gas back down. So gold looks like it's recovering. Silver made a little bit of a run. I think there's still opportunities on the upside because those precious metals are viewed as an inflation hedge, a store of value. So I think also with money flowing out of crypto, I think we may see more money flowing into gold and silver. So again, as a store of value against inflation, those prices move up with inflation. So they are a good way to inflation-proof your portfolio, a good hedge against inflation, silver, gold, platinum, etc. So again, we talked about those last week as well as ways to inflation-proof and recession-proof your portfolio. And you'll find the link to last week's part 1 in the description box. And we see all the other commodities that had run up on the Russia invasion of Ukraine, and because Ukraine supplies so many of these commodities to the world, they all ran up, but they now seem to be settling down a little bit. So I don't see a strong opportunity in those at this point. And a lot of them you can't short with ETFs. You have to use individual stocks like we were talking. I really want to be able to short orange juice at that peak, and there just wasn't an ETF to be able to do it. And we can't short individual stocks in our retirement accounts. But you may be able to in your cash accounts. Excuse me. And then we see this, risk off move up in the bonds. And again, I believe that's just strictly a risk off move because the stock markets are declining. They're selling stocks, buying bonds, but we know the Fed's going to sell bonds. So I expect that price to go down. We have been watching several ETFs to be able to play these swings. And if we might take a crack at shorting the price at one of these peaks, since we know it's a little irrational. We'll have to look at the risk reward profile, though. If it's not really worth it, then I won't do it. So I hope that helps. Again, we talked about a couple ways to inflation and recession proof your portfolio. I will show you the list of other videos we have in the description box that we've talked about before. Again, last week we talked about, don't just sell in May and go away. There are opportunities here. Obviously, there's opportunities to short. And we have a list of ETFs, inverse ETFs that you can use to short the market in how to make money from a bear market. And there's a whole list there. It's also pegged as a pinned comment in our ETFs channel in our Discord. So, yeah, Tandrew, the gold ETFs that we use, and there's a number of them. It depends if you want to play gold directly, the commodity, or miners. So, and I could talk about that again more tomorrow. The one we really like is GLDI for gold and SLVO for silver. They're what they call ETNs, and they pay a monthly dividend. So they're more directly related to gold. Actually, I'll try to bring that up real quick and look at the description of it, GLDI. Then there's also individual stocks like AU. I think GLD is a direct gold miner. there's Barrick Gold, etc. We own several others. Goro, Goro. We own ASM is more silver. PZG is silver and gold. Those are all small guys. JNUG is the junior gold mining ETF. And then there's some others. Again, maybe I can prime that and take a look at it. Show that tomorrow. So here's that Credit Suisse guy. Again, we have a very large, I wouldn't say very large, we have a large position in this that we doubled down on not too long ago. So it is based on this NASDAQ Gold Index. It's a covered call strategy on the Spider Gold Trust. And again, it pays a monthly dividend. So number one, you're getting the swing up in gold, plus you're getting a monthly dividend. So even if gold is down and you're just waiting, you're getting paid monthly to wait. So that's one of the reasons we like this. And the silver version, again, is SOVO. The oil version is USOI. We haven't played that. It was a long time ago. I really wanted to get in that, and I missed it when it ran up. So I will try to look at those gold and silver ETFs for tomorrow's game plan video too, or live stream. So again, we talked about recession proofing, inflation proofing. Also in this one, we talked about these swings in the market. We back a couple weeks ago, we were saying, where is the bottom? Well, we still don't really know where the bottom is. It looks like it's in the bottoming process. But there's no clear indication that we're necessarily at the bottom. But we're getting these violent swings, and that was part of the point in that video is with a force damped harmonic oscillator, when you kick the pendulum going one way and it violently swings up, then it violently swings back down until it reaches a new stable state. And that's kind of what we're seeing, right? Is these violent swings, and they're even happening on a daily basis now. Up until 10:30, the market might be up, and then at 10:30 it might violently swing down, and then at 3 it may violently swing back up. So now again, there are opportunities here if you catch these swings. If you're a day trader, momentum trader, scalper, these are opportunities to make money, and that's again why we're saying we don't recommend just sell in May and go away. There's opportunities to make money, and again in the volatility in the VIX, this volatility opens opportunities. And hello, Douglas. Thank you for joining us. And I'm not sure what stay home means. So, and then, other things we talked about, you all can see, our further videos, and we pointed this out a little while ago. As we approached this bottom, we started aggressively buying things. We took this long position this week again in BTI. The first time we got kind of stopped out in BOO and BTI. So we stopped out, didn't lose money as it declined further. We bought it back low. But again, we have been aggressively buying things that we think will do well in high inflation environment and in a recessionary environment going forward. So, you want to buy things that are profitable, value, they're generating money, they're produce, as Kramer says, they're making stuff, they're making stuff that people have to buy. So again, food, things people have to buy. That are profitable, have good earnings, returning dividends. Again, people flock to dividend-paying stocks, REITs. Again, high dividend-paying stocks. Most of them have already run up because people have already run to those. So, and then we talked about these back in this video as well. How to make money amid rising interest rates. And again, we've been talking about how to make money in a bear market going all the way back to January. So please see, the comments in those videos, this list of ETFs, inverse ETFs. And again, there's pairs of ETFs. So like for all of the index, there's a pair. You can long the NASDAQ with TQQQ and short the NASDAQ with SQQQ. You can long the S&P, and there's several you could use. SPXU is up, I think, and SPXS is short. And there's several of them, and we have a list, and we have a preferred one, and I'll try to show that again tomorrow, our ETF spreadsheet, and which one of these is preferred. Since we're going to show gold and silver, we can look at these pairs again. We have adjusted some of them as the risk-reward profiles have changed, and it may have changed our preference in which of those ETFs to use to long or short a various index or commodity or sector. So I'll plan on taking a look at that tomorrow. I'll put it in part 2, and we'll take a look at that tomorrow. So I've been going for about 35 minutes. I don't want this to get too long, but if you guys have any specific questions that I can talk about right now, I'm happy to entertain them. Let me scroll up, and I'll take a real quick look at that ticker you wanted to look at, which was the monkeypox one. Sorry, I'm just trying to find that ticker again. SIGA. Okay, so here's the FinViz, and I kind of like using FinViz for these charts because it automatically shows the trend lines, the support, resistance, the moving average, etc. That's crazy. I mean, what are you going to do? Short it? Yeah. That's a crazy run on just, news. Okay, they do make some money, but that's so well. It went up 43% already. So I mean, I don't like things that are like that. Again, it may run up further. It's still only a $12 stock. Look at the short interest. It's not a lot of short interest, so you can't really necessarily expect a short squeeze on it. And a run up like that, did they actually have positive news? They just have the most advanced treatments, and there aren't really that many. There aren't that many cases. There aren't that many. It's not that contagious. There aren't that many cases. I'd be careful with that. I mean, if you want to try to day trade the momentum in it, that's fine. I wouldn't touch it. I mean, we're more swing traders, so I wouldn't touch it. And if I did, it'd be to look to short that extreme run up. So I hope that helps. Yeah, only 100 cases worldwide. So, not a huge market. That was a news pop. So, I mean, if you caught that pop, sure, you could have made a lot of money. But at this point, jumping in, unless you're going short, I don't see it. So I hope that helps. So again, please let me know in the comments, guys. You like the live streams better than the prepared video premiere. I like interacting. Hopefully the audio is good, better. Obviously, I can't really tell how it's coming out, but hopefully that works out. Hopefully the quality of the video. Please give me your feedback because again, I don't really know. So, and I can adapt. So please let us know what you think. What do you want to see more of, less of, etc. You can find links to all those videos in the description box. You can find links to our affiliate link to Webull and FinViz, etc. So that helps us out if you use those. So obviously that's our only compensation. We're not making money from this YouTube channel yet. So that's our only compensation right now. And if you join our Patreon, then you also get alerts when we buy or sell anything. Also inter-week updates to our watch list. So if you want to support us further, we really appreciate it, but it's not a requirement. So I hope this all helps, and please let us know what you would like to see. Otherwise, I'll end here so it doesn't get too long, and we'll see you all tomorrow at 9 a.m. for part 2, and we will do our updates to our watch list based on all of this data that we've seen today. So again, thank you for joining, and have a great Saturday, and hopefully you'll have good weather and be able to enjoy it. And the Google Doc, I will put it in the comments. I'm probably going to break up part 1 and part 2 going forward so that it's a little bit clearer and it's not being worked on while you're accessing it. So I will do so. And thank you again for that suggestion, Douglas. I really like that. I'm starting to put more of our documents in Google Docs so that I can access like these copy paste comments that I'm putting into chat on another machine. I'm accessing via Google Docs versus I used to use Notepad. So that was a great suggestion. I really appreciate it, and we're going to use that more going forward. For your information, that ETF spreadsheet that I use, I'm trying to figure out a better way to deal with that and automate it more so I don't have to manually update it, whether it becomes a spreadsheet or a database, etc. I do have a separate database. But yeah, and I'll put the link in the Discord with the notes under the video posting. So sounds great, and I'll see you all in the Discord. Hopefully see you tomorrow at 9 a.m. Thank you for joining. I appreciate it. Have a great day. Bye.